The information in this podcast is current on the day of recording. It is general advice only, does not take your personal situation into account, and may not be suitable for you.
Good morning, everybody. My name's John Addis. I'm the founder of Intelligent Investor, and I have here with me this morning Graham, all the way from Canada, and Gaurav, who's going to talk about AGMs. But I also have a magic number. I think Graham might have the inside running on this. The magic number is 12. Does anybody know what that might be related to?
I can put my hand up.
I thought you could, Graham.
I don't know if you guys were aware, but I was actually listening in on that conversation, so I'm in on it as well. Why don't you just
12,
tell us?
Yeah, 12 is it's related to Gentrack. The stock's up 12-fold since we upgraded it 4 years ago, which is definitely my best call, and it's got to be almost at the level of miners. So yeah, we had a good run with Gentrack, but it's differences in management incentives are kind of skewing things a bit, I think. And although the company's doing pretty well operationally, which is a big part of the share price rise, it's the current valuation is just baking in so much growth from here. It's I think it'll be hard for the company to meet. It's valued equally, amazingly, at the same market cap as Hansen, despite Hansen having 4 times the profits.
Oh, wow.
So yeah, it's basically aiming to be Hansen, but its share price is already there. Which isn't a good risk reward.
Would you have expected this to be 12 times the market cap now when it was 4 years ago? Could you have ever imagined this, Graham?
No, nowhere near that. It's basically been we've chased it all the way up, holding on for dear life. But no, I mean, we thought that the stock would do well. It seemed undervalued at the time, and there was a good margin of safety there. But the performance operationally has been well above expectations, and the share price reaction to that has been well above expectations. So yeah, it was a case of all things going right, basically.
Is this another case of people paying through the nose for growth?
Yeah, definitely. Paying through the nose for future growth. They've taken the last 3 years turnaround and basically just projected that out into infinity. But that's just not how capitalism works. There's plenty of competitors to Gentrack. Hansen itself is doing very well at making inroads into the cloud billing software, which is Gentrack's specialty. So,
and Octopus Energy, of course, in the UK is just killing it.
Yeah, so
they look like a real disruptor.
Yeah, and this isn't a market that can cascade towards a monopoly or anything, such as in imaging software for radiologists or like those kind of situations. You might be able to justify an extraordinary share price because it's a very skewed ending. You could really just be massively successful if you get to being one of the few survivors. But billing software is just an ordinary competitive industry. There's some captivity within Gentrack of its customers that they can't switch easily, but all of its competitors have the same benefit, so it's hard for Gentrack to attract them over. And yeah, we'll see how it goes.
The price is up about 50% since May, which is kind of mad in itself. Listeners will hear this on a Friday, but we have a review on Gentrack going up this morning. So would you like to preempt that, Graham? Because we had I think the price guide was hold up to $9.50. It's currently over $12. What are we going to be doing in about an hour's time?
Well, we're downgrading the stock to sell. Yeah. We'll lock in the profits that have come since that buy recommendation. Not because the company is doing poorly, but just because the expectations thrust upon it are now just so extreme that it'll be hard to meet those expectations over the next few years. And yeah, given the competitive dynamics and just how the industry is humming along, that there's just too much risk, basically, that things could go wrong from here, and none of that at all is built into the share price. So we're not saying that the company is doing poorly. We're not saying that there's some iceberg immediately on the horizon, just that the price you're paying now builds in a tremendous level of growth over the next few years in earnings and revenue. And there's a chance that the company doesn't meet that. And if it doesn't meet it, then today's price is crazy. So, it's time to take some chips off the table and put them in other stocks that are more interesting.
That was a good call, Graham. I mean, I used to own Gentrack in its first run, and I sold it. I think I bought it $2 something and sold it at $6 something. I thought I did very well out of it, actually. And because I'd seen that price go from $6 back to $1 or something, I had kind of written that business off, and I thought, oh, this has turned into a basket case. I got lucky to got out of that thing, and I just stopped looking at it. And I think it takes a really impressive mindset to look at something after it's fallen, when things are looking pretty grim. That's always the way to make a big gain. You never make a big gain when everything's looking wonderful and it's very clear that a big gain is going to be made. You make it when you feel kind of sick and you don't expect to. And that's certainly the case here. You were particularly vocal about this one, I remember. I was probably a bit more skeptical about it. And the result has been outstanding.
Oh, thank you. Well, there's another lesson as well, which is it fell straight after we bought it. I remember that, what was it? It was $1.80 and then immediately dropped about 15% or something or other. This is going back to our 2014 recommendation. Since then, it's up like tremendously. But it goes to show that the reaction or the share price reaction immediately after you buy it can be wrong. And right now it could continue going up, but that doesn't mean that it's wrong to sell now. And because you don't know where it'll be 5 years from now. And likewise, when we bought the stock, the immediate market response afterwards was to fall 15 or 20%, but that turned out to be a great price to buy. So you can get the short term wrong if you get the long term right.
Well, talking about feeling sick, let's move on to some AGMs that we've been paying attention to or going to. Let's start off with MinRes, Gaurav. I know Nathan went over there to see it in person, which I think is great. You were otherwise occupied at a Lovisa AGM in Melbourne, which I was planning to go to until I got sick. Listeners can probably hear in my voice that I'm not fully recovered, but feeling fine. Let's kick off with MinRes, Gaurav. Yeah. How did you feel about the AGM?
Yeah, this was perhaps the most hotly anticipated AGM of the season, and for very good reason. There's two important things going on at MinRes. The one we were fully aware of and had expected at this part of the journey, which is the startup of the Onslow Iron Ore project. Now, just as a reminder, MinRes over the last few years has invested about $4 billion into this iron ore project to get this large sort of $35 million ton a year project up and running. Now, this is a project that's been around for 20 years. Multiple companies, maybe half a dozen businesses have tried to get this thing up and running, and only MinRes has been able to do it. And in fact, they got it from start to end in about 4 years, which is a remarkable achievement and really shows you what these guys are very, very good at. So that project needs to get up and running because there's a lot of idle capital sitting there, and all that capital was funded with debt. So the balance sheet's bloated, but the cash flow is now starting. It was the first quarter where Onslow made positive cash flow contribution, and Onslow should be ramping to full capacity at in the middle of next year. It's incredibly important they get that right. Now, the other thing that was going on was all this governance stuff that we've all been reading about, the allegations and even admissions that MinRes has been dishonest for MinRes management. Chris Ellison in particular has been dishonest for a number of years, particularly in the early days of the business. And there are a few governance mishaps in the later stages too. But look, as I said in the review, I've held this stock for 5 years, 6 years, something like that. And it came as a real shock to me. Partly because it hasn't really turned up in the numbers. I mean, all the misdeeds were so tiny. We're talking sometimes a few $1 million and oftentimes only a couple of $100,000. So the misdeeds in quantum were tiny, but that does not mean they're immaterial. I mean, behaving in that fashion for an MD or for a large business is completely unacceptable. Shocked the pants off me. I was really surprised by it. And for good reason, the share price has taken a bath. Trust has been lost. And that trust won't come back until something changes.
It's so crazy when these executives make those silly, greedy, kind of risky decisions that can just destroy their reputations overnight. It reminds me of what was the Sokol, Warren Buffett's kind of right-hand man. He was kind of in the prime position to become CEO of Berkshire Hathaway and made this tiny insider trade with the stock that made him like a couple of $100,000. He was being paid tens of millions, and it just destroyed everything. He was fired and taken out of the running, of course. But you wonder what goes through their heads with this stuff.
Well, it's wrong to focus on the numerical amounts.
Yeah.
Right. Like in that case, it's a little bit like Al Capone getting done for tax evasion and Rene Rivkin all those years ago getting fined for making $250 front running Qantas shares, I think it was. It's not the amount that makes the difference. It's what it says about them as people and the culture of the business that they've created, which is what's going to hang over this company, I imagine, Gaurav, all the way until he goes. So I have a couple of questions. Like when you watched the MinRes AGM, did you get a feeling for whether that culture has changed in the interactions between, the CEO and the board, or the contrition that he expressed?
Yeah, no, this was a completely different AGM than I've ever seen before. MinRes AGMs are usually a Chris Ellison show. The chairman might make an introduction, but he generally gets his butt on that seat and stays there. No one else says anything apart from the CFO occasionally. You might have an engineering guy to explain one or two concepts, and that's about it. But it's all about Chris Ellison. This was completely reversed. We had the chair host and begin the meeting, control the meeting all the way through. Ellison got up for a little bit and gave a 30 or 40 minute blurb about operations and kind of apologized. And I think apologized quite sincerely for his actions. But this was completely different. They're trying to show you that the board is back in charge. I don't think this is the right board. Well, it's certainly not the right chairman. The board is actually quite... There are a couple of notable exceptions. There are two board members.
Look, I'm not going to hear anything against Justin Langer. Why would anybody have a problem with a great batsman, an amazing cricket coach being on the board of a resources company?
A friend of mine said to me, he said, every time you see a cricketer, or cricketer specifically, but a sportsman more generally, enter the board of a big publicly listed company, you should run. Yeah. And we can all kind of giggle at that and nod, and yes, that is a good red flag. But we're in the business of making decisions under uncertainty. Every decision we make is a trade-off. There's no such thing as a perfect business. Nothing is uniformly good. We have to weigh what's good and what's bad. And if you're going to have arbitrary rules like that, I just think you need to be a little bit careful about it. You've got to take this job quite seriously and understand that you're working in an environment that demands trade-offs. And the trade-off was, do you take Justin Langer, which I agree at the time, even I thought it was a preposterous appointment. Would you take him over a 20-year track record, an explosion in earnings and production coming over the next few years? And the judgment I made was, I take it. Turned out to be the wrong call. But going back, I'd make that call every time. I think that was a rational decision to make at the time. So I just wanted to get that in there, that it all seems very obvious in hindsight.
Of course.
But, I've, as I said, been the shareholder for 5 years, and there were very few indications in the numbers that anything dodgy was going on.
Okay, so I have another.
There are always rumors. You hear things that and I sort of was aware that Ellison could be a bit of a jerk and a difficult person to deal with. But aren't all CEOs and founders jerks and difficult to deal with? Was anyone tell me that Bill, that Jobs, maybe the most celebrated CEO of our generation, and rightfully so, was he a delightful person? Would anyone want to work with him?
He didn't bring cupcakes to work.
I've got a quote for you, which I'm actually going to use in the story for not this Friday, but next Friday on this founder issue, and about how you can't expect founders to be normal people. It's their abnormality that makes them do what they do, and that has all sorts of adverse consequences. And in the case that you talk about, Gaurav, with Steve Jobs, for example, all the terrible sort of personal and messy relationships he had in his personal life. The fact that he just ate carrots for 6 weeks. You can make a list as long as your arm about all of the weird stuff that founders do.
I remind
stuff.
Listeners that John is the founder of Intelligent
Yes.
Investor.
I was hoping we could skip over that.
Well, the first time I met you, John, actually for about the first week I met you, you didn't wear shoes, and I thought that was a bit odd.
Yeah, that's true. That is true. I did get accosted by a friend of mine for not wearing shoes, wandering around Bondi Junction. But look, that's the extent of my weirdness. I think that the intelligent investor hasn't changed the world in the way that Mineral Resources has or Apple has. I think I'm a fairly run-of-the-mill small business person. I want to give you this quote by George Bernard Shaw, which says, "The reasonable man adapts himself to the world. The unreasonable one persists in trying to adapt the world to himself. Therefore, all progress depends on the unreasonable man." That's kind of a brilliant quote that I think captures the essence of this founder problem. But the question I have for you, Gaurav, in respect of Chris Ellison at MinRes is, do you think he'll ever leave? Because this week, was it last week, he resigned from the board of it's another lithium company.
Yeah,
on the board
some tiny lithium business.
Yeah, tiny lithium company. He said, I'm resigning to concentrate on Mineral Resources. Now, that's the sort of thing that he would have done 10 years ago because he wanted to concentrate on the growth of Mineral Resources. Not when he's leaving in 18 months' time and you think, okay, I'm freeing myself from this company. What does that say about him?
Yeah, well, I must say, look, I wasn't in the room, but I was logged online, and from my reading, there was no indication that he wanted to go. I don't think he expects to go. I reckon we'll get to 18 months. Onslow will be up and running. Look, this is a possible sequence of events, right? Onslow gets up and running, the balance sheet repairs, the share price recovers, and everyone will forget about the problems and the governance issues and stuff. And, once a share price is rising, anything is forgiven. And when it's falling, everything is a crime. Like, I think we're overthinking this a lot as well. We have to remember that MinRes has gone from $80 to 30-something bucks in the space of 2 months. And a lot of the pylon and recriminations have to do with that share price movement as much as they have to do with governance issues. So I think we'll see Ellison back, and I'm not sure. I'm not sure people are aware of just how determined he is to stay. And the chairman's actually leaving before he is, which I'm pretty pleased about. That performance the chair gave at the AGM was not encouraging, nor was it impressive at all. So
it will be interesting to see. I mean, whether Ellison gets a say in who the new board members are, because you could imagine a situation where in 18 months' time, if this situation plays out as you describe, that the board can say, no, we made this commitment. You made this commitment, Chris, to leave after 18 months. And you've got to stick to that. Otherwise, what does that say about us as a business and our ability to deal with these kind of challenges? Yeah. And that will depend on whether they insist on that or whether he maybe gets his own way and says, well, I'm coming back in some kind of official capacity rather than a consulting capacity. That will depend on the board members that get replaced over the next 18 months, I imagine. So it'd be interesting to find out whether he has some kind of role in who comes on. I bet he does.
Yeah. I mean, there have been changes. There's new board members who are really impressive individuals, and they've formed a ethics and governance committee, which you would have thought they had already, really. Most large businesses have that, and they're going through related party transactions, and they're a lot stricter now. They've got a lot more guardrails in place for what not just Ellison, but any senior manager can do in that business. And I think this is a company that's used to just used to flying by the seat of its pants and not having many guardrails in place. And again, as I said in the review, I think you gain something by putting in guardrails, but you also lose something. Yeah. It's possible that the business becomes better governed, with more rules and less dodginess going on. Yeah. But it also loses much more risk averse. I was going through some of these decisions that Ellison has made, right? They're mad. Yeah. A conventional CEO would never make the calls that he's made over the last 20 years because they are mad and they don't make a lot of risk-adjusted sense. But these are the kind of individuals, as you said.
That's the nature of the unreasonable man.
It is the
That's
nature.
him
Yes,
trying
that's
to
right.
adapt the world to himself rather than the reasonable man adapting himself to the world.
Yeah. No, I agree. And
Graham, sorry,
I was just going to comment on the. We won't talk about the. This is a free podcast. We won't go into too much detail about what we're saying about MinRes, but it's hard to buy at the moment, and there's very few fans. There are few people sort of looking for value in the stock, but not many. And as we discovered with Gentrack, like when it's really hard to buy a stock, it's often the best time to do it.
Okay, let's just pause this podcast while I put a buy order in.
Cut that bit.
Cut that bit. Okay, Graham, what have you got to say about Chris Ellison and MinResurrection? Any comments, any observations?
It does seem to be just a very familiar story that this happens in all kinds of businesses, that particularly the ones where the management is known for being aggressive and ambitious, that these kind of things just creep up. And even the strange board appointments, that's just another sign of it's usually a reflection of a management team that wants to get things done because they just want a bunch of yes men or women on the board who are, just going to go along with their decisions. So I think it's a similar tale that you read elsewhere, but you can never tell what's happening at that kind of level from an outside perspective until these kind of scandals come up. I think it's very difficult to have spotted this.
Yeah, as I said in the review, it's the stupidity of Ellison that stings me more than his villainy stings me. Like he has
seems like such a waste.
He's lost more than anyone else in this scandal in terms of dollars and prestige and reputation. And what has he gained? So little. It seems crazy.
It sounds to me as though he's going to get a chance at redemption, but we'll find out. Let's move on now to Lovisa, which is an AGM you did go to. Yes. Kind of different circumstances.
Yeah. Well, even here, I mean, there was a change in the vibe of MinRes, and there was definitely a change in the vibe of Lovisa as well. Last year, when I was at Lovisa, Victor Herrero was kind of in full flurry. They were opening stores at quite a rapid pace, but the share price was $17-18, and there was. My expectation was that Herrera would stay maybe 8 to 10 years at Lovisa and systematically build out these stores. I was really impressed with him then. I was really impressed with him again when I saw him in Melbourne again. And the difference is that he's leaving. And I think it's a huge loss for the business. And that kind of loss, I think, was sunk in the air a little bit. Brett Blundy, who can be, reputation for a difficult, hard taskmaster, is very complimentary and very nice to Victor in a way that maybe he wasn't last time. Very complimentary of his efforts, and there seemed to be a good relationship between board and CEO. There was no mention of the new bloke, John Cheston, who's going to be taking over. When I spoke to Victor afterwards, he insisted he's excited about remaining a shareholder. He's like one of the largest shareholders in the business, and he said he's going to be that way. He said, I'll see you at the AGM next year, as a fellow shareholder. I don't know how seriously take all this stuff. He's said he's going to keep his stock and remain committed to the business, that he loves it. But, last year he said that he bleeds Lovisa and he wanted to stay there for a long time, and 12 months later he's leaving. So we've got to be careful at how we interpret these words. In terms of updates, look, this business is doing perfectly fine. The market's really a bit huffy about a slower than expected store opening cycle. I'm not concerned about that. Blundy kind of spoke to that a little bit. He said that, we've got the format right. We're now looking for locations, and sometimes we find locations quickly and sometimes it takes a bit longer to find them. So this is a period where it's just taking a little bit longer to find locations. They've set up new distribution centers in the US, been a bit occupied with that. They're growing very quickly in Europe. And there's just so much opportunity. There's in 49 countries, and in only 2 countries do they have 100 stores or more. There's just infilling would take them years and years, and probably another 1,000 stores in infills. And then there's the American, the Chinese, Japanese markets. There's some big markets that are thoroughly underpenetrated. So, I'm still pretty optimistic about this business. I still think you can see a store count in the many thousands And this could be a genuinely global business in a way that Australia has not produced before.
Yeah. What about
so
competition?
The only thing I'd say was competition has came up. But the founder of Lovisa has left to start his own firm, Harley and Harper. He's got a fat check from private equity who will fund his first 20 stores in Australia, and it's possible if they're successful that he may chase Lovisa overseas as well.
Do you think he can poach some of the staff? Did he have
Graham,
a good?
That is the key question. I think that I'm less worried about the sales poaching than the staff poaching. So we asked the chair and some of the board members whether he's poached any staff. He said there are no current working Lovisa staff who left Lovisa to join Harley and Harper, but he has picked up some former Lovisa staff to work there. The stores
so
are doing.
If you imagine taking all of the key executives and managers out of this business, transplanting them to the other one, how much of the value do you think moves over to the other business versus Lovisa?
Well, Blundy has said at the previous AGM, Blundy said that Victor's great and the CEO is really important and I'm really important, but the most important people in this business are my design team.
Are the customers?
Are the customers? It's not really. I mean, this is a genuinely customer-focused business, but even Blundy wouldn't say that. The design team is the most important.
That's because they're the corporate crap you get from Qantas, Graham, not Lovisa.
Yeah. As they take the single olive out of your salad.
This is I really like the vibe from Lovisa. It's a $3 billion business, certainly not small, but it's still got a scrappiness and a determination that you see in smaller businesses, and it completely lacks the bureaucracy or the sloth that you see in larger businesses. Blundy let slip that he still approves every single store that gets opened. I think that's extraordinary for a chairman to do that.
And you're paying Victor Herrero $30 million a year, and he has to get his stores approved.
Well, I think this is the reason why Victor left. I mean, there's no official line from the business. I'm quick to say, and in private conversations, they haven't let anything slip either. Victor's official line is that I was brought in to roll out stores. I've rolled out almost 400 stores in 4 years, and I want to go do something else. But I think reading between the lines for me, I think it's clear that Victor has asked for his pay packet to be maintained at $30 million or so a year.
Yeah.
And Blundy is just saying, no, we can't do that. Shareholders aren't happy with that. You're taking too much. And he said no, and so Victor's gone elsewhere.
Okay. It could be that Blundy's a control freak.
I think the two worked reasonably well together. The big fighting point that they've always had is that Victor demands everyone flies economy and Blundy has his own plane and will never fly in anything else. They've come to. I've heard them argue about that, but that's about it.
Yeah. Okay. Just thinking aloud, Gaurav. Why would the competition, if they're so confident of being able to take Lovisa on, take them on in a relatively small market like Australia, which is the most saturated with Lovisa stores, and not go immediately to some bigger foreign market where Lovisa has not penetrated to the same degree?
Yeah, I think they just don't have the local market knowledge. Shane Fulshire, who was the founder of Lovisa and was its CEO for a long time, was just a much more cautious character than a Victor. That's why Victor was needed, because he would open stores very cautiously, one territory at a time, and thoughtfully, but just very slowly. And Victor came in like a hurricane and just went in all these markets and opened plenty of stores. And so I think there's that cultural element that the founder is just a much more cautious figure than what Lovisa is. And I just think site selection is really important for these businesses. And they know the Australian market really, really well. And so that's where they went. It may be also that's where funding was available. Remember, these guys are PE backed, and there might be some limitations about where that money can be invested.
Do you think that PE funding is a limitation? I mean, obviously it's good in terms of resources, but the strings that come attached to PE money are often quite tight taut.
I reckon for a rookie entrepreneur, that's true. But for someone who's proven their chops at Lovisa before, I think he has pretty much free reign. I'm not sure that would be a limitation for him.
Yeah.
Blundy did say that in Greece, they were thinking about opening in Greece, and there's a local competitor there, and that competitor actually called Lovisa up and said, instead of entering Greece, why don't you just buy me out, because I don't want to compete with you. And it just reminded me of Mrs. B from Warren Buffett's Furniture Mart,
Nebraska Furniture.
Nebraska Furniture Mart. Yeah,
who everyone was just terrified to compete with. And Lovisa is now, it's not everywhere, but they are getting this reputation of being ferocious competitors. And I thought it was a really good sign that the Greek incumbent, rather than face Lovisa head on, even though he had all the advantages of legacy, he would want it to be bought out rather than to face them. I think that was really interesting.
And did they buy him?
No. They're going to go in. I think Blundy was licking his chops at that, thinking, "Oh, you're scared."
Okay. Yeah.
Yeah. Look, I did finish that review with a bit of caution as well. It's the opportunity is really exciting, and we just got to be a bit circumspect about how about the investment returns from this point. The stock price is up a fair way. They're getting a new CEO who we don't really know, what he'll be like. And Victor was really extraordinary. He was one of the best retail CEOs that I've come across. So there's a great opportunity here, but we just need to be thoughtful about it as well.
Yeah, it'd be interesting to see where Victor goes next. It might be worth keeping an eye on him because.
Well, he did say it was a large listed company. So.
Right. Okay.
It's certainly not in Australia. He's spending a lot of time in Japan, so maybe it could be something Japanese.
Okay. All right. Let's move on to a company that none of us know much about, apart from Graham, who's been researching it recently. Well, I hope he knows a lot about it. We're about to find out. Graham, tell us about Biome.
Which one is that?
What? Which
It's a very interesting business, but it is a tiny one. It's only 140 million market cap or so it's not our typical business. But it's in probiotics. It's one of Australia's main probiotic manufacturers, and it just grabbed our attention. There's been lots of talk about probiotics recently. They seem to be gaining a lot of traction with consumers beyond kind of the typical Yakult stuff that you would find. But these are more serious concoctions that target very niche diseases. I think there's some debate about whether they work, but putting the evidence aside, they're certainly popular for things like irritable bowel syndrome or even acne and dental issues. You can get probiotics for everything these days, and Biome makes about 17 different versions. So it is an interesting business. It's got pretty impressive gross margins. It earns about a 60% gross margin, which is comparable to its main competitors like Blackmores and Swiss and some other businesses. So to achieve that with its much smaller level of sales, only 13 million of sales, shows that it's doing something right on the cost side. It shows it's doing things right on the administration side. And I think that it's got a pretty good chance of continuing to grow. The only hesitation isn't so much on whether its popularity continues with its marketing efforts and sales efforts and all of that, but that it depends heavily on these two suppliers for the bacterial strains that it uses inside its pills. And the contracts with those bacterial suppliers renew every 5 years or so. And at each of those renewals, the company kind of risks having its prices hiked. And so I suspect that if Biome does well on the sales side, you'll end up seeing those margins contract over time as the original suppliers start to take more of that revenue for themselves. But
Graham, I think has the business now I don't even know what the word is, concocted, built its own strain?
It hasn't yet. So at the moment, it doesn't have any proprietary formulations, but I think it knows the risk that's associated with having these two suppliers which it licenses its strains from. So it is working towards that. I know that that's where some of its research budget is going, but it's tough. It's a long road. It's a kind of a different business model if you're trying to grow your own strains, though it's all kind of up in the air with these kind of businesses because it's so marketing driven. I'm a bit surprised that they're even trying to. A lot of other companies in the space will just license a bacterial strain, then they'll put all their effort into marketing, and the consumers don't really understand the difference between minor changes in bacterial strains, so they aren't really in a position to assess whether it's worth this guy's or that guy's. They're just going to base it on how they feel subjectively. And so I don't think that I think that they're working towards that goal, but I would be surprised if they're putting too much effort into it. And I think that the consumers may not really notice or care over the long term anyway. What will matter is how well they build that brand around the strains that they have and license.
So, Graham, this is an interesting area, mainly because in supplements, which I presume this is considered a supplement, supplements are notorious for selling a product that doesn't work. It seems as though probiotic supplements do work. Maybe not for you. Your first line of the story was, I recently tried a probiotic, convinced that its 10 billion active cells would work wonders for my indigestion. Instead, I spent an afternoon wondering if my stomach was hosting a rave, which is kind of the brilliant opening paragraph.
That was a long day.
That's absolutely fantastic.
Yeah, no, but I got to say, go ahead.
Well, it's an interesting thing that Blackmores, a company like Blackmores, can grow to such a kind of market position and dominate a very profitable niche with products that really, I think, are just placebos. And this is something that does seem to work.
Well, I don't think it's at the same extent as the vitamin scam, but probiotics, they've been shown to work for a limited number of things. So there is some evidence for them improving things like irritable bowel syndrome or colic for children and a few different things like that. But the trouble is taking those assumptions and then assuming all probiotics work, that everything the company markets is going to help. And so, you got to be careful about what the evidence says specifically. And often the case with some of these studies, they're almost always funded by the company itself, and there usually isn't a record of the studies that failed. So they can do 5 studies, one of them works, 4 of them don't. They publish the one that works, and it appears that there's evidence for it. Yeah. So I don't think that probiotics are as bad as or are lacking as much evidence as for some vitamins, but it's on the spectrum. They're not; these are not pharmaceutical drugs that have gone through tens of thousands of patient tests with phase 3 clinical trials and that kind of thing. They're regulated by the TGA very loosely compared to pharmaceuticals. They don't have the same requirements for evidence or for marketing or for anything like that. So they might work. I feel a little bit better despite my initial experience with probiotics. I've been trying them for kind of a month or so, a bit more than that. But I mean, what does that mean? It means that I have a slightly better feeling stomach. That might have been any other factor that played out over the past month. So you gotta, I think that it is still 95% marketing, and maybe it'll work for you. Maybe there's some evidence for specific things, but the company is not the same as a pharmaceutical company.
It reminds me a little, Graham, of A2 milk, because A2 also, I mean, there's some evidence.
Good comparison.
Yeah, that A2 strain had some clinical evidence of working, but it was not for everyone. I think it was minor. But for those who loved it, really loved it. But the actual economics of the business as well, that had a huge gross margin as well, a really scalable kind of product, and was really strong on marketing. And that's kind of what seems to be the case here. I mean, you've got enormous gross margins to begin with, a very scalable kind of production and distribution system. And And marketing.
And they're good at marketing. Yeah,
they're very good at marketing. Well,
the CEO is a marketer. That's his background,
which is probably what you want.
Well, in this kind of business, it probably is.
Yeah.
He's not. Well, I'd say he's not looking at the evidence too closely, but that's probably incorrect. I'm sure he is, but I'm sure he also recognizes that what matters in this kind of business is the sales to the individual in the pharmacy and getting your brand on that top shelf and at the front of their minds. So the evidence, the efficacy, all the rest of it is less of a priority, I imagine.
Which is one of the reasons maybe why, as you said in the review, Graham, that he's bundled the marketing budget in a sort of all-encompassing sales, marketing, and research line.
Yeah, I didn't like that, but
no,
it's better than Blackmore's, which just doesn't do any research.
Yeah, I just want to finish up by saying that I'm actually a little more positive on Biome. I don't own the stock, and I don't think have plans to buy it really. But not my kind of business. But I can see the case for owning. I mean, the sales growth has been incredible.
Yeah, I can as well. I don't want any of what I just said to suggest that it can't do well, because these businesses can do well. Blackmore's went from this level to what it is today by doing exactly what Biome is trying to do. So none of that's to say that Biome can't succeed. It's just that there are risks that go with the purchase today, and in marketing-driven business models, the sales can evaporate just as quickly as they form.
The worst thing is, I reckon, that because it's got $140 million market cap, and I think it's still unprofitable at this stage, but if it doesn't work, this is the kind of stock where you feel like a complete idiot if you bought it and it doesn't work, because you're thinking, what was I thinking? What was I doing? And you got to think about that and how that affects your psychology as well. But if it does work, it probably seems obvious after the fact, and that always gets to me as well. I think this regret minimization investment strategy can do wonders as well. But you want to avoid feeling like a complete idiot.
Just watch your portfolio limits.
Yeah,
we're not saying sell. Just be smart about portfolio limits.
Just be smart. Just make the right decision. Just only buy stuff that goes up.
That's right. I think on that salutary piece of advice, only buy stuff that goes up, we're going to call an end to the podcast. Thanks very much, Graham from Canada. And thank you, Gaurav from Sydney.
Thanks, John.
Thanks, John.
And just a reminder to everybody that our episode in a fortnight will be the last of the year. So make sure you tune in to hear all of us drinking while we talk on the final podcast of the year.